Struggling with cash flow is one of the most common problems for most e-commerce brands, especially those that have complex inventory or who do a lot of wholesale revenue. But the good news is that for many e-commerce brands, there's actually a lot of different steps that they can take to improve their cash flow that they haven't even begun to explore yet. Within just 30 days, you can make significant improvements to your cash flow if you implement the right strategies. So in this video, I'm going to share some actionable tips that will help you predict and control your cash flow, with some of them delivering pretty immediate results. And hopefully by the end, you'll be in a much better position to handle your cash flow a lot more effectively. But before we dive into the specific tips, it's important to understand the foundation that affects everything: cash flow forecasting. Your cash flow forecast is basically your roadmap. It helps you predict when cash is going to come in and when cash is going to go out so that you can make more informed decisions. Having this sort of predictability helps you with all those difficult decisions that you were too nervous to make because you just weren't sure if you could afford it. A strong cash flow forecast can help you see ahead of the curve. Now, cash flow forecasting can oftentimes be a pretty challenging process, and you'll likely need help from an expert. Even most accountants aren't very good at it. However, just because it's difficult doesn't mean that you should be flying blind. Even a very simple cash flow will provide a lot more value than having none whatsoever. And you can get started by just using a Google Sheet and predicting your cash flows to the best of your ability for the next 30 to 60 days. Just check on it weekly to compare with your actual cash flows and make adjustments for anywhere your assumptions might have been wrong. So now that we've established the importance of forecasting, let's move on to some actionable tips that'll help you improve your cash flow in the next 30 days. The first tip, and probably the most impactful for any e-commerce business, is to optimize your inventory management. The first thing that you can do here is to optimize your reordering. Your aim is to avoid having too much or too little inventory in stock, both of which can hurt your cash flow. Accurate forecasting helps immensely with this. It'll help you reorder inventory just in time to meet sales demand without overspending. Separately, one of the quickest ways to free up cash is to clear out slow-moving inventory. Running clearance sales or promos can turn dead stock into liquid cash that you can use to reinvest into faster-moving inventory. Now, it's obviously not ideal to do this too often because it can hurt your brand if you're running discounts that are too deep, and it can also cannibalize sales from the full-price products. But sometimes it can really help to do this even if you're selling at a loss, because it just frees up the cash. It's better to sell inventory that cost you $100K for $80K of cash rather than just sitting on $100K of inventory forever. You also want to take a hard look at your product lineup. Reducing the total number of SKUs and focusing just on your best sellers will help you optimize inventory and cash flow. By taking these sorts of steps to improve inventory management, you free up cash that can be used elsewhere. Another tip that's closely related to inventory management is how you handle your payments. One of the simplest ways to improve your cash flow is by extending your payables. Delay bill payments to the last possible date without incurring penalties or damaging supplier relationships. This way you get to keep cash in your account for longer. Thing is, just don't overdo it. Your vendors are also people who need to manage their cash flow as well, so maintain a good relationship with them. And if you do have strong supplier relationships, you can negotiate with them to ask for longer payment terms. This can be the difference between paying 30 days out versus 60 days out. Even small changes can significantly improve your short-term cash flow. Maybe they won't accept, but hey, it never hurts to ask. Certain payment platforms also allow you to pay bills that you would normally pay with a bank transfer using a credit card. It may incur an additional 2 to 3% fee, but it can also buy you an extra 30 to 60 days. Once you've extended how long it takes for you to pay people, the next step is to speed up how quickly you receive cash from customers. Now, this might not apply to smaller or earlier stage e-commerce brands that haven't yet expanded into wholesale, but everybody eventually gets there. The first thing you can do is try to set up your invoicing such that they have shorter terms, like net 15 instead of the standard net 30. A lot of buyers might push back and try to still ask for the net 30, but again, it's worth a try. It's also a common practice to offer a small discount for wholesale customers who pay sooner. So for example, you'll see something like net 30, meaning that they can take 30 days after the invoice is issued to pay the full amount, or they'll get a 2% discount if they pay within 10 days. You do lose a little bit of profit on that discount, but the sooner you collect the cash, the sooner it can be reinvested. It's also a very common practice to set up a wholesale Shopify website for smaller wholesale customers. This way they can make the purchase on a credit card, which means that you get to collect the cash faster, and it's less of an administrative burden. If you are doing net 30 invoicing, don't forget to set up an automated system to remind customers of payment due dates as well as when they're overdue. It's extremely common for smaller companies that don't have the capacity to have a full-time accounts receivable person to get lazy about the follow-ups. And it's also extremely common for customers who aren't being followed up with to take their time to pay. So using automations in your accounting software to harass the customers to pay sooner can definitely help. Once you've made these operational adjustments to your cash inflows and outflows, you can also look to strategic use of credit to help the situation even more. A common easy win is that if your ad platform offers monthly invoicing, you should take advantage of that. This means that instead of your credit card being charged for every $900 that you spend on Facebook, for example, you can wait until the entire month of spend is incurred and then pay that invoice 30 days later. Pushing out that payment means that you get to see the return from revenue on your ad spend before the cash flow for the ad spend goes out. There are also certain credit cards that allow for a much longer payment cycle on ad spend compared to the usual net 25 of most credit cards. Separately, while not always ideal, short-term financing options like merchant cash advances or lines of credit can be useful to bridge the gap during cash flow crunches. launches. However, you want to use these sparingly and very strategically. It's very easy to slip into a bad habit of just using a debt treadmill to keep your business afloat. While using credit strategically can give you more breathing room, the last tip is a classic one, which is to save cash by spending less. Go through your profit and loss and identify places where cash is being spent on things that aren't really driving a great ROI. Pay special attention to your fixed costs, because while some variable costs will go up and down with your actual performance, fixed costs can end up ballooning over time. There are often instances where those fixed costs can be paused or temporarily reduced. And if you're in a stretch where your cash flow is a bit tighter, you may want to consider changing your software subscriptions from annual to monthly, at least temporarily, because while it may end up costing you more, it keeps cash on hand for longer. While some of these steps can take time to bear fruit, others like clearing out old inventory, extending your payables, or switching your ad spend to monthly invoicing can improve your cash flow within 30 days. And while it may not feel like a massive difference, all of these steps add up to keep your e-commerce brand more financially healthy. If you need any help implementing these steps or building a cash flow forecast, feel free to reach out. We're e-commerce accountants and this is the type of work we do. In the meantime, if you want to give it a shot yourself, you can also watch this video on how to build a forecast for your e-commerce brand yourself. But other than that, thanks for watching and I'll see you next time.